Hello, friends. I am Harish Krishnan, Senior Fund Manager at Kotak Bluechip Fund. And over the course of the next few minutes, I'll take you through one of our oldest equity funds, a fund which over the course of the last 22 years has seen multiple business cycles. Presenting to you Kotak Bluechip Fund. Why large caps and why is it such an integral part, a core part of allocation for investors? While it's tempting to believe that mid and small caps have a large room for growth given their small size, it is also important to understand that size comes with its own advantages. Consider, for example, cost of capital. When a large company goes to a bank or to a borrower, it gets far cheaper interest rates and cost of capital, or in its ability to attract talent, or in terms of customers wanting to associate with a bigger brand than a smaller unknown brand. Similarly, most large companies tend to have multiple revenue streams, which can help mitigate short-term shocks. Therefore, along with all of these various benefits and competitive advantages, truly, size comes with its own advantages. It is also important to understand that India is a land of infinite opportunities, but these opportunities present themselves in multiple cycles. Now, large companies have seen multiple cycles, which means that they are early movers to cut costs, but more importantly, they understand and believe in the longer term opportunity of India, and therefore they continue to invest in their businesses in the downturn, which means that they are one of the early beneficiaries of the economic recovery as it happens. At this point of time, India is also going through massive consolidation. Think of sectors like telecom, aviation, even sectors like, say, retailing, banking, autos, cement, media, especially tier 2 IT sector, and to a certain extent, the pharma sector. We are currently at the cusp of massive consolidation that is happening, which gives a massive advantage for the larger companies that are consolidating and becoming larger and more relevant to their customers. It is in this context that I would want to present to you the opportunity of Kotak Bluechip Fund. Now, in Kotak Bluechip Fund, we invest through what we call best of breed companies. At this point of time, there is a lot of debate between quality investment, value investment style, or growth investment style. But to us, at the heart of everything is actually a focus on customer relevance. Every sector is cyclical, but businesses that gain customer mind share in a downturn tend to make the most in an upturn. Therefore, our focus on best of breed is to identify companies which have leading market share and profit share and continue to further improve their relevance to the customer. Now, it is very easy to say this, but reasonably tough to execute it, which is why we tend to focus on the supply side rather than on the demand side. But customer demand is fickle, and there are multiple variables that are outside the control of companies. What is in the control of companies to a greater extent is supply side, which is in terms of the regulatory framework, the number of newer players and competition that's coming through, and the pricing regime that the company is currently experiencing. And which is where we focus on the supply side far more, wanting to invest in sectors that are consolidating. And as I had explained in the previous slide, in India at this point of time, there are a massive number of sectors which are currently consolidating. How is the portfolio constructed? At this point of time, broadly, if we were to examine the key sectors that are present in our portfolio across these three buckets, as far as Nifty Universe is concerned, our focus is currently on large banks, IT services, cement and telecom. When it comes to the Nifty Junior universe, our focus currently is on auto ancillaries, insurance and card companies, retailing, gas sector, transportation sector, and consumer food companies. And when it comes to the larger mid caps, our focus is on healthcare, capital goods, and real estate and home building. Lastly, to look at the current themes of the portfolio, we are currently running 4 key sub-themes in a post-COVID world. Thank you, friends. Stay safe and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.